Hey guys, I know it's been a little while since I actually did my last post, but I'm so glad that y'all decided to join me today and just listen up. A lot of stuff has been going on, but I don't really want to talk about that. So, just to jump right into it, the last thing that I told y'all we were going to talk about was financial statements. So, this is going to be a three-part video. Of course, the other two videos are going to be about two different financial statements. Today I'm just going to be talking about the income statement. So just stay tuned. I'm going to have a little bit of background music. I hope y'all don't mind, just to make it a little bit not so boring. But yeah, other than that, let's just get right into it. Let's just jump right into it. Um, First, I just hop on Google. You can honestly Google any company these days and then type in IR. After you type in IR, this will pop up, which IR stands for Investor Relations. You click on it, it takes you here. Whenever it takes you here, you want to click on any PDF file. Um, if you want to see the quartiles, usually put it in quartiles. So you could click Q1, Q2, Q3, or Q4. Usually I do Q4 because it shows me the whole fiscal year. So I just hit the PDF file for 10K, and actually I'll take y'all to where it actually took me. Normally it takes you to the very top. This is like the table of contents almost. Now, um, I just scroll down to where it shows my table of contents. Of course, I know what I'm looking for, which is statement of my financial statements, and here it is right here. Financial statements and supplementary data. Now, today we're going to be talking about the income statement. They've named it the statement of income, whatever. Tomato, tomato. So, let's jump right into it because I am tired of seeing this thing. Revenues. So revenue, you just want to see consistency in each year. Consistently, especially more than anything else, going up, increasing. You want to see them making more sales. This doesn't revenue doesn't mean that they have actually even gotten paid for it or anything like that. It just means sales. So with that being said, you just want to see consistently them going up in revenue. Following that, you see there, usually below this you would see cost of goods sold, or abbreviated as COGS. This just means that what it actually costs to actually make that a tangible product. Of course, Google doesn't have one, so they don't have any cost of goods sold, but they do have other costs right here. Cost of revenue kind of falls into the same lines, but not exactly the same. Research and development, very important. R&D is very important. You want to see how much money they're actually putting into the research and development into their product. Of course, if they're not really doing much and they're not keeping up with innovation, then you just might see them go out of business sometime soon. My prime example, Blockbuster. Of course, you already know what happened to them, so I won't even get into any further detail. Sales and marketing. Of course, you see that, any kind of advertising or anything like that. General and administrative, this is just anything that, that they've paid to maintain the website and everything in between. Um, European Commission fines. Okay, so normally you won't even see this right here, this line right here. But I'm sure that they, didn't follow the European guidelines of something. They, maybe they made a change in their laws or anything like that, and they just weren't within the guidelines. So, um, they were actually fined. If I could probably Google it and actually see, but it doesn't. It's honestly not that big of a deal. Of course, if they actually cost them like a lot more, then of course, if I was invested in them, then I would definitely be a concern. But you see that they kind of nipped it in the butt really quickly and covered about 80% of it the following year, and then completely the year after that. So normally you would see like I said, normally you would see cost of goods sold underneath revenue, and then below that you would see gross profit. Gross profit is definitely just a rough estimate on how much you're spending on just making the product in itself, and then after that you would kind of see how much you're able to keep, and then spread, of course, throughout your expenses. So, like I said, something that is very important for research and development. This is, of course, like I said, they're developing their product, so hopefully they're making it cheaper, and well, not only making it cheaper, but also making their prices of that product drop as well. If the product price drops, then of course they're tapping into a bigger part of the market, and which means more sales. More sales is always a good thing. Um, Now, going on further, you see, okay, so yeah, total cost of expenses. They just added all their expenses together, and you see it in the following line. Uh, of course, you see that each one of their expenses have gone up each year, kind of almost dramatically. But at the same time, you have to consider that they've made more sales. So in doing that, they have also made more expenses. Um, so this following line is actually the difference of their revenues minus their total costs and expenses. This is definitely like a rough estimate on actually how the company is doing in itself, excluding any kind of investments, just solely on operations. This you can run ratios on this. So the ratio that you would do is income from operations divided by revenue. So you're actually able to see on how much money you keep from all the money that you had actually made or they made. But so the first year is 20%, a little bit above. The following year, 21%, pretty much almost exactly up 1%. So that's a good sign. And the last year of which is 2020, it had actually gone up a whole another 1%, almost 1.5%. So they're increasing their income directly from operations really well, which is a really good sign. That means that they are doing something right, maybe saving more money on how much it actually costs them to make a sale or anything like that in between. um, Other income expenses, parentheses expenses, which is net. So whenever they say net, this just means that no details, all of it just put together. Um, and like I said, so other income, this just means that of course this is probably of course Google is a huge company and they have lots of money just kind of sitting there. Of course, if they just have a big pile of cash that is not doing anything, then they're actually losing money because of inflation. And so that what they try to do is actually reinvest that money, but into other companies. So hopefully that they're making the right investments and actually making money themselves. So you can see that if it were in parentheses, you would have seen that they actually lost money that year. But each one of these years has been in the positive. So 2018 they had a really good year. 2019 they lost a little bit of money, and 2020 it kind of went back up almost as high as 2018. But this doesn't really reflect directly on the company in itself. This is more so like the investors and like advisors that they have inside the company, but not so much how the company is doing on their products. Um, but nonetheless, this does kind of this is definitely a good thing that they are in the positive and making other investments. So now this leads into the following line, them just adding these two numbers up, and then you get these numbers right here, which is just your um, it's right here. It says income before income taxes. Sometimes you might just see it as EBIT, earnings before interest or taxes, earnings before taxes. EBT. But nonetheless, this is very important right here. The following line, you see provision for income taxes. So this is just their taxes, them getting taxed. Of course, you don't see this in parentheses because in taxes, if it's a negative, you're actually getting a positive. So you're getting money back. Um, so they're paying their taxes, and it comes out to their net income, which is bottom line. Sometimes you may see that, or hear people say that, bottom line they made 30 billion, because they remember this is in increments of millions. But nonetheless, let's continue. So now this leads into my one of my final ratios, which is net income above your total revenue. This will actually show you how much you keep uh, of all the money that you had made after taxes and after you paid your expenses as well. So the first year is 22, roughly, if you want to round up, 22.5%. The following year, it went down to 21% point two, and the following year it kind of went back up to 22%, almost exactly. So they're not doing too bad. Their net income is kind of staying somewhat consistent. That's honestly one thing that you definitely look for: consistency. Warren Buffett definitely quotes that a lot. Consistency is key. Before I talk about this next line, I just want to say that this is only one of many things that you will pay attention to in yourself. We have already gone over all these numbers up here. And of course, this shows you how the company is doing in itself. But as a shareholder, I wouldn't look at these numbers. Of course, I want to see how the company is doing, but I'm not the owner of this company. So I actually want to see individually as a shareholder how much I will be earning per share. So that leads into EPS, earnings per share, which is now shown right here below. It says basic net income per share of Class A and B common stock and Class C capital stock. So this is just talking about different kinds of stocks that the company owns, and then they named it income per share. It's normally EPS, earnings per share, tomato tomato. But this will actually show you, it shows you 2018, 2019, and 2020, and you can see consistently that it's gone up gradually. Um, of course, like I said, this is only one thing that we pay attention to, just because it can be manipulated by managers of the company. Um, I really want to get it, I really won't get into too much detail of how they can increase it, but one of the ways that they can is just buying back a lot of their own shares at a high price, making the price of the stock go up, and of course it pops up here showing that all these people made a lot of money when actually the company didn't do that well. So you definitely have to pay attention to the other things, which leads into my other videos, the balance sheet and the statement of cash flows. Statement of cash flows is very important, but well, they both are. But we will get into that later. Um, Lastly, like I said, diluted net income, earnings per share. This is exactly what I was talking about. So, diluted net income is just when they're talking about the company buying back a lot of their shares so they don't have to pay as much interest on it. So it actually shows you a more so accurate amount. But nonetheless, you can honestly work this out on your own. If you don't trust them, you can just get the net income and then divided by the number of outstanding shares that the company is currently having. So, um, in doing that, then you can calculate this yourself. But guys, that's all I got there for today. I do have my other two videos coming out, so stay tuned. I know this took me a little while, but I'm gonna hop back on it just because a lot of things have been going on. But I'm glad y'all are here to Let's Talk Business. I will see y'all later.